Ladies and gentlemen, kicking your welcome to the daily update. Hope you guys had a good day trading. Today, market is up about 0.7%. Dow on the S&P Nasdaq 1.1%, semiconductor 1.7%, Dow 0.4%, Russell 2000, banks, energy, biotech, healthcare, home builders, utility, emerging market. All these guys are green today. Transport and retail are the only sectors with red numbers. Bitcoin, gold, silver miners are up, dollar down, oil up, treasury bond up. VIX is down about 10% there. Let's stick with the S&P 500 ETF. Spider! 65 minutes are here. So this is what we closed yesterday. And we saw a significant gap up. I think close to about 3% at open. What happened was, though, when we did get up there, you can see that September swing high down gap. We actually talked about this, right? When we got to close that level back in December 1st, they did not able to fill that gap. And that's going to pose a problem going forward for the buyers. And you can see for entire half month or so, things got very, very hectic for the buyers. So when we did see a very big gap, I mean, bulls really went for it this morning. Well, they did fill this gap right here, as you can see. So there was this gap, down gap, that was opened back in 5th of December. At least that gap is filled, but that September gap, that is still remaining. Keep in mind, though, that September gap, right? So when last time, when we did see, that swing high here during September, we did see 15% plunge in about a month and a half or so. So that 411 area is the level where so many people remember how bloody, how scary and fearful and disastrous it was. And you can see actually started with, looks like 2% gap down. And then market just kept plunging down. So that level has been glued to many people. As you can see how carefully bulls been threading here as it got closer to that level. And we did get there early December. We inevitably saw very fast plunge. And bulls just made a one shot to possibly fill that up gap. Well, they just weren't quite get there. They filled a little bit more than December. As you can see right here, you can see there just a little bit was filled, but that's still remaining there. So once the down gap wasn't fully filled, and quickly, it looks like a lot of people probably YOLO'd up here, I'm guessing, right? A lot of people YOLO'd longs, and as soon as they start coming down, all those stops are taken out. People are getting stopped up. People are in panic, fearing getting out. And that's kind of what caused that 3 hours of destruction. Perfect. Right? And that up gap, the entirety of that up gap was fully filled. It would have been better for the buyers if some of that remaining or some of that up gap from this morning was at least some of it is open, just like how you see how buyers are not able to fill that down gap. It would have been better, much better for the bulls. However, bears were able to fill the entirety of the down gap or the up gap. But thanks to the micro-term moving average right here, you can see that micro-term moving average been acting as support in the last couple days, supporting the bulls here. So at least we got a little bit of pop. Did end of the day with about 0.8% gain here. So a lot of bears are going to call this as a bear flag. It could be, right? And if it is a bear flag, well, bears are going after about 398, 397. You can see my midterm and my short-term moving average residing vicinity. Both of those moving averages been acting as a resistance here several days ago. So that probably could be the level of a retest. Should there be a continuation to the downside if that bear flag actually plays out. However, if we do see a follow through to the upside, bulls could potentially try to go. They gotta fill this gap as quickly as possible if they don't want to encounter another disaster. You can see last time too, we saw a little bit of that pop here, 1 day pop. It tanked right back down for an entire week after that. So that pop, if they don't go up and fill this gap as quickly as possible, we could potentially see another downturn. Let's check out that oscillator. And on top of that, you can see the oscillator already has crossed down prematurely here. So you can see we did see that cross up yesterday. And now we're crossing back down. We're beneath this oscillator resistance. I kind of like to call that a coiling setup. Sometimes these coiling setup could be bullish if bulls can break out. You can see that's the breakout point there. And that's the breakout point right there. So you can see once that happened, we actually did see about a week or so of a bullish turn. And subsequently though, after that coiling setup breakout, though we did see that downturn, this market remained with higher lows. And that trend actually reversed. And that affirmation, right, of that coiling setup to potentially play out all happened right here. And that's when we saw in late October and we're up here. Yes. And so we have very similar setup, some sort. Again, this setup could fail if this oscillator comes right back down. However, if we see this oscillator going back up and breaking above this falling oscillator resistance, that could potentially be that coiling setup breakout signal there. And if we do see something like that, there's good chance bulls can get above 411. If not, bears are eyeing on 397 and 393. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening. Good luck training tomorrow.
You have another question? Sure, I got one question for you. It's, can you deal with that? You have another question? Sure, I got one question for you. It's, can you deal with that?